Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and in today's video, we're going to be taking a look at which stocks super investors have been buying up the most this past quarter. Now, this is a new style of video on the channel, so if you guys do end up enjoying it, let me know down below so I know to make some for future quarters as well. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. With that being said, let's take a quick look at my portfolio dashboard. So in total, I've invested almost $53,000 into the portfolio, $18,000 which is from this year alone. My portfolio value is currently sitting at $70,648, which I believe is the highest we've ever had on video. In terms of gains, we're approaching that $18,000 mark, and my total return is at 33.55%. Now, my cash position may need to be adjusted down, I do believe. I made some purchases recently, and I'm not sure I've added enough money into the portfolio, so it might be a little bit lower than this. But in terms of dividend earned, I have earned almost $2,000 worth of dividend income, and all that has been reinvested back into the portfolio. Going forward, my yearly projected income is $1,107, which gives me a portfolio yield of 1.57% or a yield on cost of 2.09%. Now, with that being said, let's just hop into Datorama and take a look at what super investors have been doing this past quarter. So in terms of which stocks are owned the most frequently, you can see here that it's Microsoft, Google, and then followed by Meta. Now, this does not take into account how large each position is. So if we're looking at size alone, then it would be Microsoft, then Amazon, and then Meta, and Google actually falls all the way down into 5th place. Now, assuming that they are splitting up the calculation for the percentage allocation for Class C and Class A shares separately, then we can see here that Microsoft makes up about 2.725% of all super investor portfolios. Now, comparing that to Google, the Class C shares make up 1.644% of all portfolios, and the Class A shares make up 1.446%. So if you actually add those two values together, Google is the largest percentage of all portfolios. Now, if you guys do want to check out the list for yourself, you can go to Datorama, and if you press this arrow right here, it'll show you more than just the top 10 spots. Now, one thing that really surprised me here is Carvana, and what I assume happened is probably one of these funds or one of these super investors has a relatively large position that with the growth it's seen the past couple years has probably ballooned into a massive position. Now, interestingly enough, even though Warren Buffett holds such a large position in Apple and his Berkshire Hathaway fund, I believe about 22%, it's only number 9 on the list in terms of percent owned by all other super investors, so it makes me believe that other super investors don't tend to hold Apple as often. And I guess this kind of does go along with what I was saying about Carvana. The max percentage of portfolio is 80.82% and only 5 people own the stock. So somebody has, I believe, an 80% weighting in their portfolio for just Carvana, which is insane. Now, while we're on that topic, just for fun, let's check out Carvana stocks. So you can see in the past year, it's up over 124%, which is more than a double. But where it gets really crazy is the past 5 years. Even though the return looks pretty low at 77%, assuming that one of these fund managers bought it somewhere near the bottom, they could have some crazy returns. Buying it at 2022's bottom in December of 2022, they'd be up over 7,200% in just about 3 years. During that time, the price would have gone from a price of $474 per share to now $350 per share. So now we can take a look at the top 10 buys for the last quarter, and this is what I really want to focus on in today's video. I think it's really insightful and really cool to take a look at what some super investors have been doing in their portfolios. So in terms of just buys alone, basically how many super investors bought which company, the most bought company is United Health, followed by Amazon, and then Google. Now again, Google's Class A shares and Class C shares are separated, so combined they may even be larger than Amazon and United Health. Now I am surprised to see United Health as number 1 here. I posted a video just a couple days ago covering Warren Buffett's Berkshire Hathaway transaction in United Health. They recently opened up a position in the company, so if you guys want to check it out, you can check out this video right here. But mainly, I believe that at the time it was listed as number 2 or 3 for the most frequently bought stock, but now it's moved up to number 1. What I'm assuming has happened is once all the data came in for which stocks super investors are buying the most, and this updated, and now they moved up to the number 1 spot. Now, in terms of which stock was bought the most in terms of percent, or I guess in terms of value, it's actually United Health again, Amazon, and then surprisingly PDD. Now, I'm not sure how they calculate it, but what they might be doing is subtracting any sells, and in that case, Google has been getting sold a lot by a lot of investors. So I thought it would be interesting to take a look at some super investors' portfolios. I just cherry picked a couple interesting ones. And so we have Bill Ackman's Perishing Square Capital Management right here. Now his portfolio is fairly concentrated and his largest position is Uber at over 20% of his portfolio value. And I like that buy a lot. I hold a very large percentage of my portfolio in Uber as well. Now, as you can see right here, the only activity that he did make this past quarter was selling 100% of his Canadian Pacific position, which made up about 8.71% of his portfolio, and I definitely did not expect this move. Bill Ackman has been holding this company for quite some time, I believe, and I'm surprised he didn't wait for a bigger turnaround in the company before selling. I'm guessing at this point he decided it was worth cutting his losses and investing in other holdings that might have more potential for growth. Now, the biggest investment by far was his addition into Google, which is the Class A shares right here. He added 20.84% more, which changed his portfolio by about 1.19%. So he does own both Class C and Class A shares in his portfolio, and adding the two together, you can see that it's his third largest position. It would be over 14% of his portfolio value. Now, I think this is a pretty strong core for his portfolio, and I'm happy to see him adding more into Google. It's my largest singular stock holding in my portfolio. Next, we have Michael Burry with Scion Asset Management. He has a fairly small portfolio at $56 million for assets under management. And we can see that he has only a very concentrated portfolio. He reduced Estee Lauder this past quarter, and then he bought all into Lululemon, Bruker Corp, Regeneron Pharmaceuticals, Mercado Libre, and United Health Group. Now, the one I'm most excited to see here is United Health Group. This is a brand new position in his portfolio, and it's now 11.09% of his portfolio. Now, for me, as you guys know, this is one of my worst performing stocks within my portfolio, so I'm happy to see him adding into it. We'll have to see how this plays out in the long term. He does like to trade in and out of stocks fairly frequently. I won't be surprised if by next quarter he already dumps this stock for a quick return. Now, the only other one that's interesting here is Mercado Libre. It's kind of like an Amazon competitor in South America, and I've heard that it's a fantastic company, though I have not done research myself into the company. Next, we have Valley Forge Capital Management, which I believe is ran by Dev Cantasaria, and you can see right here that this is for Q2 of 2025, and he's basically done almost no activity for his portfolio. Just to double check, hopping into his activity tab, the only thing he did was reduce into it by 11.45%, which to me, out of all things, makes the most amount of sense. Honestly, it's trading at a little bit of a rich valuation right now into it, so if he had to make any trade, I think this one makes sense. Now, his portfolio is crazy concentrated. His largest position is over 30% of his portfolio, and that's all in FICO. Now, he probably has some fairly substantial gains on the stock because he bought it a fairly long time ago, but right now it's actually been seeing a pretty steep reduction in share price, so we'll have to see if this recovers throughout the year. S&P Global comes next at 20.44%, and I love this company a lot. I have a very big investment in it in my portfolio, and then we have names like MasterCard, Moody's, and Visa. Now, I'm surprised he hasn't put more money into ASML. He added pretty high into it, I believe, and so he could have taken advantage of the recent decline in stock price and maybe made a larger position, but I guess he's just managing his risk. I also pulled up Pat Dorsey's portfolio. It's Dorsey Asset Management. You can see right here some of his larger names. We have Meta as number 2 at over 16% of the portfolio, which he did a very small reduction in. And then what I like to see is that he did add into Google as well, 3.64% more, so nothing too substantial, but it now makes up over 10% of his portfolio value. Now, the most surprising one and the most interesting one is him doubling his position in ASML, so it's now a 10% holding in his portfolio, and I actually believe that's a pretty good move. In terms of sells, he did sell out of PayPal entirely, and you guys do know that I hold PayPal stock in my own portfolio. I think he's selling a little bit early. I think over the next couple of years with the amount of share buybacks that they're doing, I think the stock price is going to go up pretty substantially. Now, we'll have to see how this plays out. I could be completely wrong on my PayPal thesis. Then we have Terry Smith with Fundsmith, and his portfolio is very diversified, a little bit too much to cover in just one video, but you can see that his main position here is Meta and then Microsoft, and he reduced both of them slightly. Now, I think taking gains on these companies is not a bad idea. They're trading at pretty full or even overvalued valuations, so it's not the worst idea here. Now, Google does make a substantial portion of his portfolio at over 5%, and he made a very small reduction to it this quarter. Now, same for his activity. There is just too much to look at here, but the most interesting buy he did was he doubled his position in Intuit, which I'm very surprised about. Although it's a small percent of his portfolio, I believe Intuit is a little bit overvalued at current prices. Then for reductions, he sold fully out of Equifax, which is pretty interesting, and he sold fully out of the Brown-Forman Group. Now, he continued to reduce his holding in MasterCard, which I don't agree with. Even if the company is trading at a little bit of a rich valuation, I think it makes sense just to hold just in case because they keep performing just so well every single quarter. And for the last portfolio here, we can take a look at Poland Capital Management. It's a pretty large portfolio with $32 billion of assets under management. So the number one position is Amazon, which is interesting to see, but they actually sold a substantial portion at almost 22% of the value. Amazon recently had a pretty substantial dip in stock price due to tariff issues, and I actually picked up some more shares during that time, but I guess they decided to sell some of their shares. Next, we have Microsoft, which is pretty common to see in some of these investors' top spots. Now, the most interesting one to note here is Adobe. I actually haven't seen too many people buying more Adobe shares. I think there's been a lot of risk and a lot of fear associated with the company, and seeing him add 20% to his Adobe position is pretty nice. I do actually think that long term Adobe will continue to do well, and with their aggressive share buybacks, I think it's a matter of time before their stock price corrects back to fair value. Now, unlike a lot of investors, he actually did reduce his Google position by 11.73%, which is pretty interesting to note. Funnily enough though, he decided to add to his Class A shares. He added about 1.49%, so it's still a 0.34% position in his portfolio. So before we do end the video, I think we should take a look at some of the financial metrics for at least the top 3 buys that super investors have been making. Now, since I covered United Health in my last video, if you guys want to check it out, I'll pin it right up here and I'll put it at the end of the video. But because of that, we'll cover Amazon, Google, and Nvidia. Now, if you guys want to see me cover any other companies, which I'm not going to be able to cover today, then let me know down in the comments below and I can cover them in a future video. So the first company we're going to take a look at here is Amazon. And if you guys did make it this far into the video, you know what to do. So in terms of revenue, they've been able to scale up their revenues pretty quickly over the past couple years, and the same can be seen for their earnings per share, though when they have big investment cycles, it does affect it negatively like what happened in 2022. Right now, they are starting a new heavy capex cycle, investing in those data centers and all those GPUs, so EPS and free cash flow per share are going to start going down over the next year or two. Now overall, Amazon functions like a company that's still in its growth phase. I do hope that eventually they'll start returning more value to shareholders through share buybacks and maybe even dividends down the road, but for now they haven't decided to do that just yet. They're still diluting shareholders. As you can see right here, shares outstanding have been increasing over time, and their stock-based compensation is huge. It really eats into the free cash flow. Now, at least in 2024, it does look like stock-based compensation trended down a little bit, so if they can at least keep it steady, I'll be pretty happy going forward. Now, like I said, eventually I do hope and expect that this company will start doing share buybacks and start reducing their stock-based compensation, because that'll really influence the amount of free cash flow they're able to generate for shareholders. Now, there's no dividend chart here because they don't pay a dividend just yet, and their net income margin fluctuates because they kind of have a lot of control over their profitability. In certain years like 2022, they choose to invest very heavily, which lowers their profitability metrics by a ton. In the past couple years, their capital expenditures have exploded. It's basically exponential growth from 2013 all the way till now, and 2025 is expected to be close to $100 billion in capex. Now, as a shareholder, I'm okay with heavy investment cycles as long as they're getting a great return on investment, and right now they're getting close to a 15% ROIC, which I'm pretty happy with. The segments of the business that they are making these investments into right now are their more profitable segments like AWS, so I'm okay with that. So next we can take a look at Google, and this is my largest single holding in my portfolio outside of ETFs. Right now it makes up over 10% of my portfolio value and it's been performing very well, especially in the past month. It's up to $204 per share. Now over time, the revenue has been increasing very quickly, and same can be said for their earnings per share and their free cash flow. They did peak in 2021 and did have a decline in 2022. Now going forward, this company does have a lot of risk surrounding it. They may be forced to sell some of their assets, including Google Chrome, so we'll have to see how that plays out, but that could definitely negatively impact the business. Outside of that, they also have the continuous threat from AI. Companies like Perplexity, ChatGPT, and just Microsoft in general are trying to compete very heavily with Google's core business. Now, so far, I do believe that Google has done a fantastic job adapting, but some of my concerns rely on the fact that their profitability metrics might be impacted negatively by some of the adjustments they made to their core business. New features such as AI overview could eventually result in less clicks and less ad monetization, which could impact the core business's margins. Now, for the shares outstanding, they have bought shares back really aggressively over the past couple years, which I am happy to see. And although their stock-based compensation is pretty high, it seems to be fairly steady at the moment, and free cash flow has still been growing a little bit faster than that. They recently initiated a dividend in 2024, and they also did a dividend increase pretty recently as well. Now, the net income margin is very high in the company, almost 30%, and although their capex has expanded very quickly over the past couple years, the return on invested capital remains high at over 20%, so I'm fine with it. In their last earnings call, they announced further expansion of their capital expenditure program, and that's just to meet the demand that they need to supply for AI computing. And the last company that we're going to take a look at here is Nvidia Corporation. I'm sure you guys have all heard a ton about this company already. It's basically the best performing company in the market, and you can see right here exactly why. All their metrics have basically exploded: the revenue per share, earnings per share, and free cash flow per share. The growth rate on every single one of these metrics has been insane, and you can see that even their shares outstanding have remained relatively flat. Now, although they have fairly large stock-based compensation, the free cash flow they're generating is just so much higher than that, making it relatively insignificant. Now, their dividend is extremely small, so there's nothing really to touch up on here. They increased it for the first time in a while in 2024, but their net income margins are massive at almost 50%. The company currently has a ton of pricing power because the demand for their GPUs is just unbelievable. And compared to companies like Google, Amazon, and Meta, which are all buying their GPUs, their capital expenditures have remained very low for the size of revenue they're generating. Now, although they might not have as much room to invest back into capex, their return on invested capital is significantly higher. Right here, it's over 50% in 2024. Now, Nvidia has been a fantastic investment over the past 5, 10, and even 20 years, but we'll have to see how it plays out going forward. As always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at which companies super investors were buying up the most this past quarter. If you did make it this far into the video, let me know what you think about their recent buys and which company you bought the most of this past quarter as well. If you haven't yet checked out my latest video covering Berkshire Hathaway's recent purchase into UnitedHealth, check out this video right here. And if you want to see my dividend income for the month of July, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.